Okay, good afternoon everyone. Welcome to the technical analysis tutorial, if you like, on Ichimoku Cloud or Ichimoku Support and Resistance. There are many trading systems around. Ichimoku is considered a trading system in itself. There are lots of other systems around, but the Ichimoku system in itself is designed to be a system based around support and resistance of markets, and I want to show you some ideas around that, how it can be used particularly in different time frames to facilitate trading decisions. But keep in mind, it's the price action that will make or break a trade, as you know. Ichimoku is just simply an overlay to give some context to the price, where the price is. So there are many indicators that give you context to price. One is, for example, Bollinger Bands. John Bollinger said that his bands do is give you a look at volatility on a relative basis. Is it relatively high, relatively low compared to historical data? The relative strength indicator is another one. Is it relatively overbought or oversold? That type of thing. So Ichimoku Cloud is exactly the same. It is a relative observation of price action in the market. First of all, FP Markets have an offer for you. If you're not an FP client, they'd like to have you on board as an FP client, of course. If you open up an MT4 account and fund it with $100, they'll give you, I think it's 10 basis points on there. If you open up an Iris account and fund it, they'll give you 10 basis points on trading with $1 minimum up until the end of December 16. So it's not a bad offer in the market these days. And the notes are here about that. The account must be open between November the 8th and December 31, November the 8th being today, and is available to new FP clients only. A little bit of background about myself, that those that are here for the first time maybe don't know me. I hold the Australian Diploma in Technical Analysis, and back in 2002, 2003 did the study work for that. Certified with IFTA, which is the International Federation to hold their accreditation. I spent several years on the desk with Macquarie, Wilsons and RBS and Wilsons, I should say. My own private trading, I hold ADA 1 and 2 derivatives accreditation. I'm a member of the Australian Professional Technical Analyst Association and the Australian Technical Analyst Association, both of those bodies. Please consider that the information presented is based on my own personal research. It's educational presentation and not investment advice. You must consult a licensed advisor before acting on any information you may see or hear. So Ichimoku was developed essentially by a journalist in Japan, and it was designed as equilibrium at a glance. So you could take a glance at a chart and tell in essence where the price was from a historical point of view, and it was called equilibrium at a glance. First of all, when we consider trend in the market, because you can have as many indicators as you like on your screens, and unless you understand the basis of price movement, those indicators will continue to give you a false sense of security at the wrong time. When we look at price action, the most basic aspect of price action is a trend. There's a lot of misinformation around about trends. A trend is price-based. It's not indicator-based. It is not an average crossing over another average. It's not an average rising for whatever it is. It is simply price-based. And we break trend down into two components. One is the primary phase, and the other one is the secondary phase. So we'll take a look first at the overall trend. So when markets make a low and make a high, and we have some form of retracement in there. Let me get my pen out. I think I can. When we have some form of retracement, okay. Sorry, I want to get my pen. There we go. Some form of retracement here, and the market makes a higher low, so the sellers come in, they sell the market down, and yet the buyers enter in before it reaches back to its previous low. So as the buyers come back in, they push the price higher. As it trades over the top of the previous high, it is considered to be a trend. And in the broader sense, it is considered to be a trend. So often analysts and traders will look at a screen and look for something that's low on the left, high on the right. It's basically trending upwards is the idea. And we look for continuation of that with higher highs and higher lows and higher highs and higher lows. And only when it crosses over the previous high is that trend confirmed. So in a broad view of the market, it looks like this, where we have the market moving up. It makes a high, market pulls back, it makes a higher low, sorry, there should be a little bit more down there, makes a higher low, and then the market moves upwards, makes a higher high. So this high is, this trend started here, higher high and a higher low in here, and then a higher high and a higher low and a higher high. And then the market often can break that configuration. We get a higher low in here, but then a lower high sets in and a break of these lows in here, and you have an established downtrend at this exact point right there. So in the broader sense, the most basic observation of price trend is looking at these highs and lows. When you drill down into price action, sorry, this is a little bit blurry, this one, but you drill down into price action, we can establish a trend, short-term or long-term, by the individual bars themselves. So we have this conversation with ourselves that as a bar unfolds, it either does or it doesn't, but in this case it's made a higher high and a higher low. So we have a trend in place between, because we've crossed over the high of this bar. The next one confirms, higher low, higher high, and then the inside range here we had a lower high but a higher low in there, which gives us no trend information, no information about trend at all, other than it's a rest period in the market for whatever reason, and then the market resumes with a higher low here and a higher high, and so on. So we have this conversation with ourselves when we look at our chart, and I'm constantly staggered by the number of people who screen stare and basically while away the day without actually looking at what's going on. And this is a great place to start. Look at the individual bars themselves and look at how they form in here, and here we have a higher low in here, higher high, higher high, higher low, and then suddenly the lower high comes in, lower low, lower high, lower low, lower high, lower low, and so on, individual bars on the way down. So price action is grouped around this broad-based view of the market, this broad-based trend, and then we drill down into these individual bars in there, and are those bars trending by themselves? Is there a price trend by itself? But I mentioned there are two phases of the market generally. One is the primary phase and one is the secondary phase. When we look at downtrends, it's exactly the same as we mentioned. You get a lower high when you get a break of the previous low. It is said to be that there is a downtrend in place, and confirmation of that will be lower highs and lower lows. Within those markets, within those trending or primary moves in the market, we come into an area called a secondary market, or a congestion period in the market. So when we look at the broader markets themselves, these secondary markets occur more than 50% of the time, and they can take 3 weeks to many months to resolve themselves. So we get what's called a primary move underway, and often markets move into these secondary phases, and then before the primary move resumes again, or it does not resume again. What that looks like is this. So there's some price action on here, and we can see that the primary move on the top left here is a very strong movement where the ranges essentially stand on top of each other. And then we had this retracement here and this secondary market. The secondary market is the the area where the market simply trades over the top of each other. The ranges, they range over the top of each other. The confusion about the overall direction is simply consolidation period before the primary move either resumes or does not resume again. So as this unfolds, we have a primary move down here, down through here. There was one inside period in there. Then two small periods here, the secondary market, the primary move resumed again, and a small secondary area here at the base, and then a very strong push primary move here. In fact, there's a little secondary market in there as well. Primary move, secondary market up through here, primary move in here, secondary market, then the primary move down. This is what a lot of people don't get when companies report, and you get these very strong trading ranges come out of these reports. It becomes the primary move, which takes a lot of effort for the market to get over. Secondary market in here, and then primary move, secondary market and primary move, and here we've had a complete reversal in here and a primary move back up again so far. So we break our observation down into this type of application into the price structure itself, and then we start to overlay how in context where does this actually look. So the things that we look for inside of that, and I've talked about this on every Monday morning tutorial webinar for the last 18 months, is these potential turning points in the market labeled as pivot points, and this is where the market simply turns around and we get a close, a market that closes, the closing price here must be over this high of the bar that makes the low, and you have a pivot point. Market moves up through here, and eventually there is a bar that makes a high, and below that with a next bar, lower high, and a closing price here that is below the low of the bar that makes the high, white or black. So Ichimoku system is composed of 5 elements, and it was developed to show only support and resistance. That's all it does, is show support and resistance in the marketplace based around a series of numbers. One of the first components of Ichimoku is the Chicago span, and it is this magenta line here. We'll get some charts out a bit later, but it is this magenta line here, and it simply reports it simply follows the closing price of the current market on the right hand side. So it's the closing price here in this particular example, and it is shifted back 26 periods. So if we had shifted it forward 26 periods, it would be sitting on here. So the Chicago span is the closing price shifted back 26 periods. It is to simply gives you an instant glance as to tell you whether this current price action is higher than the price action of 26 periods ago. So 26 periods ago the price action was down here, and all it does is says, just as a glance, says, well, the price action is now higher than what it was 26 periods ago. So as it comes out of the price action in areas like this here, as it moves through price action and comes into fresh air, this is where the breakout occurs over here on the right hand side, and it is deemed then that the price is higher than it was 26 periods ago. The Chicago span is a current closing price shifted back 26 periods. It allows the trader to see at a glance if the current price is above or below the price 26 periods ago. The Chicago span represents the closing price. It also represents past support and resistance levels, and we'll take a look at this. So a bullish Chicago span is above the price, a bearish Chicago span is below the price, and a neutral Chicago span is in the price. So in this example here, and I've got the same chart with our little secondary markets and everything on there, but I've overlaid Ichimoku on here now. So we can see currently on the right hand side over here that we've had this movement up in price, and our Chicago span shifted back 26 periods is still below the price action up here. So all it's saying is that this current price action down here is below the price action of 26 periods ago, and it is the Chicago span is out in fresh air, as they say, and so it's well below the price action of 26 periods ago. We can see on the just coming from the left over here, at some point all of this Chicago span here was above the price, looking quite bullish, and then as the price rolled over, as the trend started to change, the Chicago span came into the price and then below the price as the markets moved down through this area. So that's all it does. The Chicago span is just simply the closing price shifted back on the chart. The Tenkan-sen line is the highest and lowest price over the past 9 periods divided by 2. So it takes the highest price and the lowest price over the past 9 periods as a dollar value, divides it by 2, and applies itself to the value of the Tenkan-sen line, the red line. So it is the highest price, lowest price over the past 9 periods. So as a new line appears here, it drops off a line at the back and recalculates out. If the price is continuing to move as it has up through here, we see that the Tenkan-sen line moves with the price. When the price moves into a secondary market, as we can see here, the Tenkan-sen line flattens out and tends to go sideways. It is not a moving average, it is simply a division of the highest price and the lowest price over the last 9 periods. The Tenkan-sen line and the Kijun-sen line represent or measure the short-term trend and the short-term support. The Tenkan-sen following the price indicates the trend is strong. A Tenkan-sen is flat, the price is consolidating or not trending. Let me go back here. So as this Tenkan-sen flattens out through here, it just says that the price is not trending, it is consolidating through here. Any weakness in price, you would be looking for the Tenkan-sen line to provide support going forward. As this chart unfolds, you would be looking for support at this Tenkan-sen line as the first line of defense. So the first observation of the Tenkan-sen is if the line is above or below the Kijun-sen. Let's take a look. The Kijun-sen is the green line. The Kijun-sen is the highest and lowest price over the past 26 periods divided by 2. So it simply again takes the highest price and the lowest price down in here somewhere, and as a dollar value divides it by 2 and comes up with a value in itself and set over the last 26 periods. It is the second level of support. So we have a short-term price line, which is the Tenkan-sen. We have a longer-term price line, which is the Kijun-sen, and it would then argue that when the Tenkan-sen is over the top of the Kijun-sen, the prices are trending, or it's viewed as quite bullish. And of course, if the Tenkan-sen crossed down below the Kijun-sen, then it would be declared to be bearish. So the future cloud, the second part of the most important part of Ichimoku is the future cloud, which is this area which is projected forward of the current price action. So when you set up your charts, you must allow space at the right-hand side of your screen that it can actually fit the forward cloud in. Some charting packages don't project the forward cloud. Get rid of it and get one that actually does. So the future cloud is shifted forward 26 periods. So this end line here is simply 26 periods away from the current price action. So the future cloud offers again support and resistance as prices move around based on past price action projected forward where that support and resistance might be. So there's a question here, the period is the week or the day, it doesn't matter. No, it doesn't matter. it simply adjusts itself to it simply is calculated over the number of periods on a chart. So if you have an hour chart, it's over 26 periods. If you have a daily chart, it's over 26 periods. A weekly chart, it's over 26 periods. It's good to keep that in mind. So the two components of the future cloud, this area in front here, the two components of the future cloud are the Senkou span A, which in this case is the thinner line, in this case a black line. The Senkou span A is the Tenkan-sen and the Kijun-sen divided by 2. So it's actually the distance between the Tenkan-sen and the Kijun-sen. It's actually those values divided by 2 again and projected forward. So as the Tenkan-sen and Kijun-sen move around, so does the forward line of the future cloud. It's simply a division of these two values, the midpoint of those two values, and projected forward 26 periods. In any future price movement, as in this current example, you would be looking for the first level of support on your Tenkan-sen, your second level of support on your Kijun-sen, and should it fall through all of those, you would be in the future looking for support on your cloud, which is past support brought forward. So the Senkou span B, this is the most important line in Ichimoku observation. It is the highest and lowest price over the past 52 periods, then divided by 2. So again, the highest price up here, the lowest price way back here 52 periods ago, way down here, and it is divided by 2 and projected forward. So it provides the most, it seemingly provides the strongest level of support. So it's in this example here, it's simply saying that down at these levels down here, this is the strongest level of support on any price weakness. And as the market trends up through here, so the cloud starts to rise, and future support is now based at this level here. The front part of the cloud is now flattening out. As this market is consolidating, the calculations are flattening out the cloud as well, or the Senkou B and the A line. They're simply flattening out here and will provide, or should provide, an observation of future support. Ichimoku and multiple time frame analysis. The high probability trades occur when price finds support or resistance in multiple time frames on different elements of Ichimoku. The direction and length of trend need to be considered for higher probability outcomes. This is what makes it work. Now let's bring up some charts. That's my last slide there. We'll bring up some charts. Now I haven't got anything prepared on this. I want to go through the market as the market is. Showing you some prepared slides would be wasting my time and your time. So on my charts here, I have 4 charts set up. Oh, you can only see 2. I have 4 charts set up. This is the current market. So on the left I have the daily chart. On the right I have the weekly chart. Now let me squish this in a bit. So we can see this is the, this is the index. This is the index, the XJO index. And we'll keep this as simple as we can initially. Oops. We'll get the weekly chart out here. So the weekly chart of the XJO index. So we can see the Tenkan-sen and the Kijun-sen had it back in, intraday. I've got the wrong chart there. Good thinking. I've got some intraday charts here. I want to show you some ideas on there. So the weekly chart of the XJO 200, and I'll just open this out a little bit. So we can see that from early January we had a big sell-off, as everyone knows, in January this year, and all of the price action, all of the indicators were below the cloud at that time. Since March, April, May, June and July this year, we have moved above the cloud. The prices have moved above the cloud up here, and there was a short period of time when the Chicago span, which is the magenta line here, started to come out of the cloud. We saw some price weakness at that time. We still had the Tenkan Sen above the Kijun Sen, and the market moved down through both of those areas into the cloud. The Chicago span moved into the cloud, quite bearish in its first stage of bearishness, and then we have to make the observation, the price observation, and we saw at the time a lower high set itself up. A lower high set itself up in the market. So we had a high up through here and a low and a lower high, and we broke the previous low last week, putting the market into a primary downtrend. But at the same time, we can see the Tenkan Sen and the Kijun Sen simply provided no support on the way through. The cloud provided no support on the way through, and the market simply traded into the cloud area. Now down in the future part of the cloud here, because this is now our market, this is today's market, or this is the weekly chart I should say of today's market, but our future cloud here is showing support at 5,160, would be considered strong support based on the Ichimoku observation. The other observation is that we can see that the yellow line has now crossed down below the black line here, and would offer, or I should say that the black line has crossed over the yellow line, and we would start to take a bullish view of the market going forward. So the future cloud is bullish, and the support level is at 5,160. So I'll come in right close up here, so we can see currently this week that the B line, the yellow line here of the Ichimoku, is flat. It has provided resistance here this week. So this week has found resistance at 5,257. That's that little flat area of the cloud at that time. So our short-term resistance is 5,200 and exactly right, 5,256, 57. We need a close over this B line to have any form of bullish view. At the moment, it is offering resistance to the current price. When we look back, and I'll just close this up a bit more. When we look back on the weekly chart, we can see the Chicago span is stuck inside the cloud and stuck inside the price. There is nothing bullish about this at all. Now, I have no idea where the market's going this week, particularly while Hillary and Donald are sorting it out. That if we look at a scenario here, if the market's rallied up to the right up here, the Chicago span would start to move back through the cloud and come out into fresh air, would be quite bullish. If the market's failed from here, and this is the next support level, is 5,162, this large flat area of the cloud, moved back is the support area. The Chicago span, if we went down through that area, down through this market into, let me get an arrow, if we fell simply through this area here, if we fell through the cloud, price action continued to move down, fell through the cloud, the Chicago span would come out of the price action into fresh air and would be considered extremely bearish. So in the Ichimoku world, we have really a market in potential consolidation here, above this strong support level here, below this short resistance level here. Chicago span stuck inside the price action in the background, and the Tenkan Sen and the Kijun Sen now starting to flatten out. So a further resistance level coming forward, here then they're quite close together, so it would be considered quite strong resistance. You have two elements of resistance, the 9 and the 26 period highs and lows resistance here, and that is around the 5,335. So lots of different things going on with Ichimoku, and all it does is give you context of price. It's saying at the moment not terribly bullish, not terribly bearish, and possibly a moment of consolidation. Now, keeping in mind those numbers, I might just move that over there. Keeping in mind those numbers here, and I'll just bring that up, there we go. So we have the daily chart here, and we saw the daily chart price action recently, the last couple of weeks, fell through the cloud through here. The Chicago span came out of the cloud at the time, and that was really on this day here, which was back on the 27th of October. The Chicago span came out of the cloud, it broke this level of support here, and there was really no other levels of support further ahead. So it simply fell away into the market, Chicago span out in fresh air. Let me get that RSI up there while I... So it came out of the cloud here, price fell through the cloud, Chicago span came out in fresh air, very, very bearish. We also saw the Tenkan Sen cross over the Kijun Sen inside the cloud here. I don't know if that's too clear. So we had a bearish cross on the Tenkan Sen, Kijun Sen, and the market has simply followed down below the Tenkan Sen, and we saw today resistance found at the Tenkan Sen line on there, and it is all of the price action on a daily basis is below the cloud. Now the cloud, the observation of the cloud at the moment in comparison to the past, if we just go back a little bit, we can see here that through September, October, the cloud was quite wide. So it is deemed to provide a wide range of support in that wide cloud. It takes a lot of effort to get through the cloud. What we're seeing here is that the cloud is quite thin, and contrary to the weekly chart, which has a bullish cloud, the daily cloud has turned bearish, with the B line moving down and the A line below that has crossed over into a bearish movement and looking bearish, and we have resistance here at the Tenkan Sen. So this kind of puts things in a little bit of context now that this little rally in the market may not be the rally that we're looking for, and here the market has a lot of work to do yet based around this type of system to offer anything bullish. The only way that this market will turn bullish in the short term is that the Tenkan Sen has to cross the Kijun Sen, the red over the green, and the price then moves back through the cloud and the Chicago span comes out of the cloud on this side of the cloud. It would then be considered bullish. And that essentially is Ichimoku in a nutshell. So what I want to do now is take a look at this, and I've got to fiddle a little bit with my charts here, but behind here I have two intraday charts of the index itself. Oops, two intraday charts of the index. On the left, I did have, where's it gone? Here we go. Okay, so on the left chart here I have the 1 hour index, and on the right chart here I have the 15-minute. So we can see the two very, very different pictures here between the 1 hour chart of the XJO 200 and the 15-minute chart of the XJO 200. So as a short-term observation of the market, if you are a short-term trader, and you may remember, and if you haven't been here before you may not remember, all we've talked about for the last 2 years here is building a rule-based system around what suits you as the market, and part of that is sorting out what time frame you're going to work in, whether it's intraday or daily or weekly or longer term than that even. We can see that the hourly chart on the left, the cloud is falling down through here. The market is below the Tenkan Sen, and the Kijun Sen have produced bearish crosses as the market falls into the low. Then yesterday we had a significant rally out of the lows, and we now have the Tenkan Sen crossing the Kijun Sen, so we have a bullish cross below the cloud. We have the A span of the cloud moving up to the B line of the cloud. The first resistance level here is 5,254. The second resistance level here is 5,276. It's where the B line is flat in the future cloud. It has offered intraday resistance today on the index. We have the price moving to the bottom of the cloud and falling away from the bottom of the cloud at the same time. So as a intraday observation on an hourly basis, this is starting to form a high in here and starting to fall away. We've had an initial bullish cross, but is now finding significant resistance based around elements of Ichimoku. On the 15-minute chart, it has given and I'll just highlight it here, it is this area here. As we had our initial rally yesterday with a small pullback, it is this area on our 15-minute chart. And I'll take that off there because we saw the price here break through the cloud, come out of the cloud, and we saw the price come back and retest. Sorry, I want to get that off there. We saw the price intraday come back and retest the support level of the B line of the cloud. So price breaks out, comes back and retests that support area, finds support in there with an inside period, and then a larger range and a larger range coming out of there. So the support was there on the Ichimoku element, and the price action confirmed that, and we're now starting to trend. So 15-minute today, as this got underway, we saw the Chicago span come out of the cloud. The future cloud on the 15-minute is still bullish. The future cloud support level, because the price is above the future cloud, the support level is here at 5,230. We can see in the 60-minute chart that 5,230 is around about where the A line is. 5,240 is around about where the A line is here, and the Kijun Sen is down. Let's get this out here. We can see it. I probably can't see it too well, but the green line, the Kijun Sen line, is here, flattening out on the hourly chart, and it is at 5,230. So we have two elements showing exactly the same support level. So any pullback intraday, you would be looking at 5,230 to hold on an intraday basis between the 60-minute chart and the 15-minute chart in there. So we have two elements showing the same price action. Let me get that out again. Two elements showing the same price action on there. So it is simply Ichimoku simply matches up that observation of support and resistance across multiple time frames. All right, now, okay. So if we take a look at some charts here, just allow me a moment. I'll just straighten up my screen again. Let's bring out the daily chart here. There's been a couple of interesting stocks this week. There's been a couple of interesting stocks this week that are worth taking a look at on Ichimoku. One of them is OZL. I don't know whether you've noticed that OZL has really moved along. I might just get the intraday charts off here so we can see that a little better. We saw OZL. We take a look at the weekly chart of OZL here. We can see that for basically most of this year that the Chicago span has been out in fresh air, and the stock on the broader space has been trending. And we can see the Tenkan-sen line is above the Kijun-sen line, nearly crossed here about 3 weeks ago, but it was in line with the future cloud here. This was a real support level in here at, let me bring that in there, around about $6.16. We can also see that the future cloud on this weekly chart is looking very strong, and it's looking strong because in this area back in February, March, the cloud was very thin. The cloud is now getting wider and wider up here, and it is trending upwards along with the stock, of course. So we're now seeing that the price crossed below the Tenkan-sen line and below the Kijun-sen line, but has simply swung up back above it again now. And there was no actual cross in here, and the price is now broken to a new high this week and looking quite strong. As a way of confirming that, you can take then this observation, this current observation, where in the daily chart the price has been below the cloud during this consolidation period, and has simply given an early buy signal here as the Tenkan-sen crosses the Kijun-sen. Below the cloud is the first sign of a bullish move, and at the same time the price crossed the resistance level of the cloud and started to close out above the cloud resistance level itself. Now, keeping in mind in the background, the Chicago span was inside the cloud. We saw the price move up. We saw a little secondary market consolidation here, and as it came out of there, the Chicago span was out in fresh air and the market has moved on. We can also see now that the daily cloud, although quite thin, is now pointing upwards here and looking a little bullish. So it's a confirming tool across multiple time frames, can give you some interesting results. Another one, of course, was ANZ. The banks are looking a little interesting at the moment. We can see that ANZ, from a price action basis, there's this large consolidation area back in February through to June this year. Price initially found resistance on the cloud, just in here, then broke into the cloud. It found support on the Kijun-sen line. It found resistance at the cloud on a weekly basis, has now broken through the Kijun-sen line and looking for support back here at the Tenkan-sen line. And so ANZ, first level of support on here will be here at $25.64, and we can see that the future cloud here has turned bullish, but the support level on the B line of the future cloud is $25.57. The Tenkan-sen line here is at $25.64. Any weakness you would expect to find a reasonable amount of support at these levels, so around $25.60. Keeping in mind that the current weekly cloud in the past year was down, has now switched into a bullish mode with the A line crossing the B line through here. We have the price just crossing the Tenkan-sen line here. Can simply cross back up, of course, but we're back inside the cloud after finding resistance at the cloud element here. If I move that out of the way and bring in the daily chart of ANZ, we suggested, let me go back here, we suggested that any future support would be down here at $25, around about $25.50, between $25.50 and $25.60 between the A and the B line. If we take a look at that here on the daily chart, that's around this level. There is nothing of any great importance here. It could possibly be some form of intersection. If there's any further weakness in the price on the daily chart, you would expect it to find support along the B line of the cloud. Now, keeping in mind the cloud is bullish, we have the A line above the B line, so the cloud is quite bullish. We initially found, point out that we initially found support at the cloud. That support has been lost and we're starting to move into the cloud now. So any weakness in here would certainly see the price move to the bottom of the cloud and hopefully find support on the weekly elements as well and in the daily elements in here. The big support resistance level from the B line of the cloud is $27.17. It is now below that level and would be considered a little bit bearish in here. We have a Tenkan-sen, Kijun-sen bearish cross above the price. We have the Chicago span moving below the price and out into fresh air here and heading towards the cloud. So we have a conflicting point of view. So you now need, in all good trading applications, you need time frames to confirm each other. We need to find support on the daily and support on the weekly on the Ichimoku system to be considered bullish on any future moves in here, and that can show up tomorrow, next week, in the next couple of weeks. ANZ going ex-dividend. Yes, this is not dividend sensitive, I should say. It's just the price is the price. It doesn't take into account dividends. It's simply price based. Are there any questions on this? Because I'll simply just go to another couple of charts. If there's a burning question, I'll be happy to go there. What's my level of confidence in it? That's a good question. I've seen it work. I have seen it work extremely well. I don't use it. I have seen it work extremely well. It is a trading, as I said at the top of the presentation, it is a trading methodology that if you put the work into it, I have seen it work fabulously. I've seen people use this system very, very effectively, particularly in intraday type of time frames and particularly around currency trading. Maybe we should put a currency up here and have a bit of a look. But it is the system is a system. It's irrelevant whether I have confidence in it or not, essentially at the end of the day, but that is the system. It is a system of support and resistance, and all it does is give context to the price. Now, in your own application to the markets, that's what, if you choose to go down that road of Ichimoku, this is how it works. It is best to find elements of support in multiple time frames, and if you can make that work for you, then focus on that. It is quite irritating to find traders that jump from flower to flower, that try this and try that, and oh, the trade's not working, I'll get my Ichimoku out and see how it looks on that. Oh, that doesn't tell me much, I'll get my Bollinger Bands out and see how it looks on that. Well, that's looking a little better, I'll stay. And it's quite distracting for the trader to build. No, there are no notes available. Does the system work on M1 time, minute 1 time frames? Oh, I don't know. Good question. Good question. Let's find out. This is ANZ on a minute. So ANZ in 1, 2, 3, 4, 5, 6, 7 minutes ago, the price crossed the Tenkan-sen line, sorry, the Kijun-sen line here, and 2 minutes ago it came out of the cloud. The Chicago span is entering into the cloud at this stage. We can see moving around a little bit. So we can see that on a minute chart, the shorter term movement of ANZ is bearish, with the cloud heading down and the B line over the top of the A line. This current movement up through here in the last 10 minutes has turned the future cloud bullish. The support level on ANZ, we can see the Tenkan-sen line and the B line here both offering the same support level at $26.93. And we can see that the Kijun-sen line here and the future area of the B line of the cloud also both offering support at $26.92. If you can build a trading system out of that, you can, I believe, work out where you're wrong and set your stop losses and do some statistics around it. Does it work? Does it not work? So someone has made the statement here, it looks like something that requires a single focus dedication, not a simple addition toolbox. Yes, that's correct. Everything requires a single focus dedication and nothing is a simple addition toolbox. Yep, let's take a look at the currencies. So that's a weekly chart. You can set stop losses at these levels on any long positions, and of course if you're short, set stops on around these elements. So clearly on a minute chart we've got the price holding this B line support here. Any break of that would be quite bearish, but at the moment it's holding this B line support, keeping in mind that this is actually heading downhill through here. So I haven't worked with it on a 1 minute chart, but the Ichimoku you can apply over all time frames. So currencies, let's take a look. Let's get the AUD out. When it's ready, here we go. Um, 60. So we'll go with the intraday charts on. Go with the intraday charts. I'll use 2 time frames here, see what comes up, just as an idea, but I would encourage you to work around this yourself. So we can see, just before we go there, this is the AUD on a daily chart with Ichimoku on here. We can see that recently, several days ago, the price came into and closed around the B line of the future cloud. The cloud is actually quite thin at the moment, and in the short term has turned bullish around here based on this price move. Just recently, the price also found support on the Tenkan-sen line here and has currently moved up and just testing this previous high on the right. So any weakness, you would be looking for support at the Tenkan-sen line here, the red line, at 76.43. The Kijun-sen line here is at 76.18. And the real support on this area, we can see the flat B line here and a flat B line here at the same levels at 75.87. You can see inside the cloud historically that it found support on top of the cloud here. It found support inside the cloud here. It found support inside the cloud here. Found support of the cloud here, support of the cloud here. Now all those things are interesting, but you need some price action around that. You need a pivot point. You need some form of tool to allow you to take a position based on the price action, not on the indicator. The price currently of the AUD is moving on a daily basis. We have the Chicago span outside of the price action, looking reasonably bullish on a daily basis here. Any form of stop would have based around this sort of system would be looking at this 76.42 as your first line of defense on the Australian dollar. The system you're using, could you please supply information as I joined late? I don't know about the system, but I use a thing called Phoenix software. I like Phoenix because the charts are nice and clear. It's called phoenixai.com.au. Okay, so intraday. 60-minute chart of the with Ichimoku over the top. We can see that the 60-minute chart over the last couple of days has been bullish, with the B line, the yellow line, rising up through here and offering support. So our B line has flattened out over the last 2 or 3 hours at 76.91, and currently the price is finding some form of support at that level. How would you trade that? You would look for a confirming piece of price action to enter into a position based around your thinking around these levels. Now we can see the Chicago span is out in fresh air. The price has had a strong rally through here over several hours earlier today, and has moved back down and clearly in some form profit taking through the Tenkan Sen, through the Kijun Sen, green red line down through here, and found support at the B line in the past. This can't be the reason. The fact that it's at the moment and the hour's not over yet. Where are we now? We've got 3 minutes to go. The hours will finish and a new line will start. There is a very real observation here that in this 1, 2, 3, 4, 5 bars you have a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So you have a primary move on an hourly basis in this direction. You need evidence that that's going to stop. It may show up as evidence, may show up as a pivot point, which means you need a close over this high here. If this is the last bar of the low, you need a close over this high here. You need to backtest this idea. Don't take it on my word. So they would have the evidence that you found support at the Ichimoku cloud line B, and you have price-based support for some form of entry. Is essentially the methodology. So an hour chart on there, if we went, and I'll change this one into a 30-minute chart. So the hour chart here, we're finding support on the cloud line, and in the 30-minute chart we're finding a little bit of support coming up on the A line of the cloud as well. And we can see that the low in the last 30 minutes was at this B line flat area here of this B line at 76.88. So Ichimoku gives, this is one of the questions earlier on about how effective is this system and is it a dedicated system. Yes, it's a dedicated system, and it gives you lots of information, but it only gives you information in context of the price itself. So everything is in context. So currently here we have a bearish cross underway and the Tenkan Sen Kijun Sen line. We have support down here on the B line, and we're only a minute or so away from a new line starting, and there we go, a new line starts in here. Any further weakness, we would be looking for support again here at either the B line here at 76.88 or the A line here at 76.90. So there's 2 pips between them. You need some evidence here to suggest that there is support there, and evidence would be a pivot point or some form of entry into a potential reversal out of there. And that really requires you to sit down and do some work with this. And if you choose to go down this road, it's a very, very simple system in itself that you can't. I would encourage you not to fiddle with the numbers in setting it up. And do some back testing and say, can I use this? And if you can't use this, that's fine. There's something else probably out there for you, but it is a viable trading method. Okay, other formula comprises Ichimoku are readily available. Yes, the formula, Ichimoku has been around a very long time. It's an open system. At the top of the presentation I gave you the settings for how it's very, very simple calculations in setting. It's in all of the charting packages, and I believe it might be in Iris. There's a new version of Iris coming out this week. It's certainly in there. Pound AUD rising today. When will it fall? How would I know? Crazy question. Okay. All right. All good. I think we're all good. Are there any further questions there? Okay, I think we're all good. So I'll quickly, I've done my hour now. I'll just, when I'll be back here tonight at 7 o'clock to do another presentation on this. Just quickly, let's take a very quick look at a couple of charts. I'll get this intraday stuff away from here and turn that back into a weekly, turn that back into a daily study. And we'll have a very quick flick around. Oh, just while I'm here, this is the Ichimoku cloud indicator inside this study system, but it has these settings in here: Tenkan-sen, Kijun-sen, Chikou span, and so on. Don't change these settings. These are the original authors' settings in there, and authors spend a lot of time doing their work, and I'm sure they have done all of the work required. So we've got a daily chart on the left, a weekly chart on the right. Let's take a look, very quick look at some stocks here. Oh, now I've lost it. Sorry, let me get this back. Okay, BHP. Let's take a look at BHP on a weekly basis. This is really, really interesting. This is where I think it sort of comes into its own. Here we can see BHP, the cloud in BHP. This is a weekly chart of BHP. The cloud has been quite bearish. A very thick cloud here during August, September. We have the price come out and test the cloud, this support level here at $22.43. We've had this tested a week down, a week up, an indecisive week, a week down, and this week up again. We have the future cloud starting to turn bullish in here. We have the bullish cross way back here, the Tenkan-sen, Kijun-sen. We have the Chikou span about to enter the cloud. The cloud is quite thin here and won't take much for this to come out of the cloud. So if there's any projection on this, then it came out of the cloud here. You would need to see BHP at 24 to around about 24.45 for it to come out of the cloud on a weekly basis. But this sitting along the cloud edge here is reasonably bullish in the short term. So in the, let me go back, we'll get some numbers out of this. So the weekly support level here is $22.38. This is the weekly B line of the cloud. So if we went to $22.38, which is around this level, we find this is basically the A line of the daily cloud of BHP. We can see here that it's recently, a couple of days ago, went into a bearish cross, and now we have the Tenkan-sen under the Kijun-sen. With a price today gapping out through here, we have a pivot point in the background. In here we have a gap away today. Our short-term support on the daily basis on BHP is 22.95. The next level is 22.81 on there. And if this continues to move out through here, we'll see this as a bullish cross. We've got the Chikou span out in fresh air. We've got a bullish forward cloud on the daily of BHP. That is simply the observation. You'll be wrong on this in the bigger picture. If the price entered back into the cloud through here, this would be the area of being wrong, and that area is below $22.38. So BHP looks really quite good. Out of that, we took a look at OZL. I think someone wanted to look at Woolworths. So the first thing we do is the weekly chart always. So we can see Woolworths, we can see the Tenkan-sen, Kijun-sen. Woolworths was a very bearish look on Woolworths for most of this year. The cloud was trending down in itself. We have recently just seen the future cloud of Woolworths turn turned bullish, even though it hasn't turned up. It's got the A line above the B line, and we have seen resistance at the cloud here back in late August, and recent resistance at the cloud here back in late October. And currently we have support down here inside the cloud at the moment. So a little bit indecisive on a weekly basis. In here we have the Chicago span that's coming out of above the price action and starting to move into fresh air. A lot of work to do on this chart. This needs to close above the B line to get anywhere really bullish, and the Chicago span needs to come out of this cloud. So as this all moves forward, we can see that the future cloud is quite thin. That can easily happen. The daily chart of Woolworths. So the daily chart of Woolworths, now we have the, you can see the Tenkan Sen, Kijun Sen have come quite close together here at 24.26. The B line here is at 24.17. Woolworths had the massive outside period at this point, and at that time turned the Chicago span over and would have closed at this point here. Since then we've seen simply resistance ignored, or sorry, support ignored on both the Tenkan Sen and the Kijun Sen line. We've seen support ignored on the cloud, and the price has fallen below the daily cloud here. You need evidence down here that there is some form of support. The cloud supports are these flat areas here, and this one here at $23.19 could potentially be a resistance area on any forward price movement, and the next level support could potentially be down here at 22.33. So a little indecisive on the weekly chart, and certainly bearish on the daily chart of using Ichimoku. Can you use this on Forex? I just did. Why are you leaving us? We'll be lost without you. Okay, nice. Okay, one last one. Newcrest. There's a request there for Newcrest. In fact, I'll finish on this. Before I do Newcrest, let's take a look at gold. The weekly chart always first. Gold, we can see gold has recently been trending upwards. We had this very strong corrective move in gold just several weeks ago, but all of this has been above the cloud here with the Chicago span out in fresh air, and this corrective move down and this recovery in gold. But we've seen now that the Tenkan Sen and Kijun Sen are about to go into a bearish cross on this price rejection here. This resistance level last week on gold was the top of the cloud back over here. It is now is going to be looking for support. It is below the Tenkan Sen and the Kijun Sen pricing in here, so it's looking a little bearish for gold, and the Chicago span has entered back into the price range through here, even though the future cloud is bullish. You would be looking for big support on gold around $1,210, this flat area of the B level of the cloud. In the daily chart of gold, we can see on that corrective move, prior to that corrective move, the price was sitting in the cloud, which wasn't terribly bullish, and that corrective move came straight out of the cloud into this low in here. But we already had the Tenkan Sen Kijun Sen cross way back in here, and simply remained bearish since then. So we have now Tenkan Sen Kijun Sen bullish cross on this side on gold, even though we had this rejection still of last night. So these are now starting to flatten out. We'll start to see these flatten out in here. Future cloud on the short term on gold is bearish with the B line above the A line in here. So this corrective move has forced the future cloud into a bearish look in there. So we still have the Chicago span out here in fresh air and below the cloud. All the daily action, the most important observation, the simple observation, is the daily action is below the cloud. It is quite bearish. The weekly action of the gold is above the cloud, and can be considered quite bullish, except that it's starting to break below the first levels of support and resistance along the way. And I'll finish off with Newcrest. As I said on there, so Newcrest, we have the same thing. We have a bearish cross, a bearish cross. You can see as Newcrest ran up with the price of gold, once it sort of crosses this Tenkan-sen line, certainly the Kijun-sen line, things start to get a really bit out of hand. So I've had a rally in Newcrest last week, an inside week this week. It hasn't given a bullish cross as yet. That last week did not give a bullish cross in here. These Tenkan-sen, Kijun-sen are flattening out. They're also flattening out in line with the A line of the future cloud. So and there's in the background is a lower high in Newcrest as well. So a lot of work to do on the price itself in there. But we do have the Chicago span out in fresh air. If we take a look at Newcrest on a daily chart, then we have now that we can see that clearly see the price has been below the cloud and recently broke above the cloud and simply didn't find support on the way back in, and it is now back inside the cloud. Tenkan-sen, Kijun-sen down here below the cloud, all quite bearish on the way down, except in the short term the cloud has turned slightly bullish. So support level here at 22.63, the next support level here at 22.20, which is also the B line of the cloud. So strong support on Newcrest around 22.20. If that is the only information you take out of Ichimoku on this particular chart, you can simply put an alert in there when Newcrest gets, maybe gets back to $22.20. Alert me, and let's have a look at the price action around here and see if there is a pivot point, see if there is an engulfing period, see if there is a hammer in there, see if there is something that would qualify as a trade entry, and take it from there. All right, I'll leave that there. I've run well over time. Thank you so much, everyone, for coming out today. I'll be back tonight to do this at 7 o'clock, and we'll see you then. Good trading.